Hello and welcome. It's Declan here with another video. I hope you enjoyed the last few videos I made with the Cannonball Run, the supercars. I really enjoyed attending as well. It was just something a little different I decided to put up. It's nice to vary your videos every now and then, and it makes it more interesting for hopefully you, the viewers, and for myself as a creator as well. So today I have the investopedia.com website open here, and I'm going to talk about the Federal Reserve, or the Fed meeting, which was held a few days ago. So the headline here is the Fed raises rates by 75 basis points at the September 2022 meeting. Fed funds target range is now 3% to 3.25%. The Federal Open Market Committee, FOMC, that's what it stands for, raised the target range for the federal funds rate by 75 basis points, or 0.75 percentage points, whichever way you want to read it. It equates to the same thing. At its meeting on September the 20th to the 21st of 2022, the new target range is that, as I said above, the FOMC press release stated, recent indicators point to modest growth in spending and production. Job gains have been robust in recent months, and the unemployment rate has remained low. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressures. So, like, the inflation remains elevated, the unemployment rate is low, and in order to bring down the inflation rate, they may have to slow down the economy a bit. But the problem here is the same in Europe and America, that if they do bring down the unemployment rate, people lose their jobs. This will lead to further economic hardship. So it is a tough balancing act, and we're facing the same thing here in Europe as in America at the moment. And also the food and energy prices, and the broader price pressures as a whole, the whole world is facing this at the moment. So the key takeaways: the Federal Reserve Open Market Committee voted to increase the Fed funds by 75 basis points at the meeting on September the 21st, 2020th to the 21st, 2022, as I just said above, and the target range for the Fed funds is 3 to 3.25%. As in prior months, the FOMC cited robust job gains, a lower unemployment rate, and elevated inflation as reasons for raising rates. This is what they're saying. So also, as in previous months, the FOMC sees Russia's ongoing war on Ukraine as a key driver of inflationary pressures. The Fed will continue with its balance sheet reduction plan announced in May. Economic projections made by meeting participants are less optimistic than those submitted at the June meeting. That's pretty significant, that things aren't, that they're not as optimistic at the moment as they have been. So all 12 voting members present at the meeting voted in favor of the 75 basis points rate hike. Among them were Federal Reserve Board Chair Jerome Powell and FRB Vice Chair Lael Brainerd. So they continue to talk about the war in Ukraine, so I won't go into that now. The FOMC statement indicated that the Fed's balance sheet will continue to be reduced according to a plan that was announced in May of 2022. According to this plan, the Fed began reducing its bond holdings by 47.5%, 47.5 billion per month in June, July, and August of 2022. Thereafter, increasing this amount to 95 billion per month. So participants in the September meeting also submitted their projections of the most likely outcomes for real gross domestic product, or GDP for short, the unemployment rate, inflation, and the federal funds rate for each year from 2022 to 2025. Now that's a long way off, 3 years. That's going to be very hard to predict. and also over the longer run. Compared to projections that were submitted at the June 2022 FOMC meeting, the latest forecasts anticipate lower real GDP growth, a higher unemployment rate, higher inflation, and higher interest rates over the next few years. The new median projections are presented below. So, like in the Fed meeting a few days ago, the 75% basis points hike, or 0.75, that didn't come as any surprise. That was forecast, and there was nothing else really that, like, going to talking about between 2022 and 2025, that's going to be very hard to predict with all the uncertainty at the moment. But like, there was no major shocks at the meeting. But I'll just take you on to the Finviz platform now, and you can see the past week performance. Microsoft down minus 2.79, Oracle down even more, and you can see the semiconductors, Nvidia down minus 5.17, which is quite a bit. I'll just take you through the major ones. Disney, yeah, down 8%. That's quite a bit now if you had a large amount invested. So Amazon down minus 7.89%, and Tesla down minus 9.24. So yeah, these are quite significant drops, and this does show you that there is still a lot of fear in the markets. And like, from showing you that article, it's pretty obvious why. So yeah, just be careful with your trading at the moment, and set your stop losses. And if you did enjoy this video, please give it a thumbs up, and please consider subscribing to the YouTube channel. I'd really appreciate it. Thanks for watching, and until next time, take care.